But in terms of maybe what's overlooked, I don't think this is going to go wrong, but what's overlooked is, I've been saying this for a while, is I don't think people are understanding or correctly estimating the amount of demand we could see for digital assets, especially now that we have the exchange trade products in the US, from the advisor side of things. So in the US especially, most of the money is advised money. It's not, we definitely have individual do-it-yourself investors, but a lot of the big pots of money are advised. So most of our wealth is advised, and that's anywhere from a 50 to 100 plus $1 trillion market, depending on how you want to count it. And we're barely off the starting line. These products are starting to be available. Some places they're still not even available. Many large advisors and wirehouses cannot actively solicit or recommend these products. They have to have people ask for them. They're not yet making their way into model portfolios or allocations or anything like that. So you can say this and it sounds kind of cliche, like you're underestimating this. People say like, yeah, okay. But when you start running the numbers, if even a percent of these advisors and advised money start to allocate a few percentage points into this new asset class, you start to get some really big demand numbers that I think people are underestimating.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. Ladies and gentlemen, buckle up your seatbelts because this is going to be a video that you're not going to want to miss, that you're going to be able to share with a friend or family member. Now, who was the individual that you all were just listening to setting the tone for today's video breakdown? That was Chris Cooper. Hopefully I'm pronouncing his name correctly. He is the VP of Research at Fidelity Digital Assets. And so in today's video breakdown, I'm going to show you guys the distraction and the truth. I'm going to show you guys what you should ignore and what you should be paying attention to. We're going to be listening to industry leading experts in today's video breakdown. And I'm also going to be showing you guys documentation from some of the world's largest organizations in the game, showing you guys that you should be focused right now on studying Web3, digital assets, blockchain, DeFi, crypto, and adopting, not only participating in this new financial ecosystem, but also participating in this massive wealth transformation. As always, welcome back. We do appreciate the love and the support. Do us a favor, if you enjoy these types of video breakdowns, smash that thumbs up button and subscribe. When you smash that thumbs up button, it does help boost the algorithm. Believe it or not, our videos and our algorithms, in my personal opinion, are suppressed to the masses because we are always spitting the truth here at CYPRX. No hopium, no hype, just straight institutional insights. So just to show you guys who you all were just listening to real fast before we start to dive into today's video breakdown, you guys can see that this is a video that was posted from this year. Only has 302 views. And you can see this gentleman's name right here. He is the VP of Research at Fidelity Digital Assets. Now, why am I showing you guys someone from Fidelity? Well, if we come over here, this is what I, again, want you guys to make sure that you are ignoring in this space, especially if you have friends or family members, or maybe even you yourself are new to crypto. This is the type of distraction that you want to avoid at all costs. So just the other day on August 9th, Cointelegraph posted this, and it is a post from Peter Schiff. Let me go ahead over here and expand this a little bit so you guys can see. This is a post from Peter Schiff where he goes on to say that people who invest their 401ks in crypto are gambling. Here's the direct post from Peter Schiff. Most Americans have saved far less than needed to have any hope of retirement by allowing Americans to gamble what little retirement savings they have in their 401ks on Bitcoin and other cryptos. Trump just made this problem much worse. Now, what is this coming off the back of? This is coming off the back of a phenomenal week in crypto where we have seen huge improvements in not only the regulatory environment in the space, but executive orders being signed into fruition. Where you can see here, this is a post from Watcher Guru stating that President Trump officially signs an executive order opening up $12.5 trillion of 401k retirements markets, into crypto investments. Okay, this is a huge game changer. So of course you're going to have skeptical people come out and say these types of things, and this is the stuff that you do not want to be paying attention to. Keep in mind, I just showed you guys an individual representative from Fidelity mention that he thinks people are underestimating the demand that is about to come into the digital asset space. Now, if you guys don't know who Fidelity is, Fidelity themselves offers 401k investment plans. You can see here, Fidelity offers 401ks. They are a major provider of 401k services for both individuals and businesses, including those who are self-employed. Fidelity provides a variety of 401k options, including plans for small businesses and self-employed individuals. Now, take a second and listen to another industry-leading expert from Fidelity on the digital asset side of things talk about how they are expanding their services and their education on crypto and digital assets so that way they can offer these things to their clients.
We leverage the broader enterprise infrastructure at Fidelity. And so, obviously a huge advantage for us to do that with regard to our security infrastructure, our screening infrastructure, our surveillance and monitoring. And so for us to be able to partner with, the other parts of the broader organization, it helped tremendously to be able to describe the processing in a very traditional control framework kind of way. And so, just helped us plug in much more efficiently. And then I would say finally, for our customers don't understand necessarily the nuances of processing crypto. And we wanted it to look the same and feel the same for them as well. So again, trying to make it familiar for us so that we could drive that, awareness and adoption across the firm and across the industry.
So do they seem, these two people from Fidelity that are literally offering 401k services to their clients, Fidelity being one of the largest investment firms on the face of this planet, do they seem skeptical to you about crypto? Do they seem like they're trying to steer you away from investing in this digital asset ecosystem? No. So what I said here in this post, because this is just a clear example of something that has happened in the past. If you've been in crypto for some time, if you're new to crypto, then this is something that, again, you need to make sure that you're avoiding at all costs. I'm going to show you guys a physical example. So they tell you investing in crypto, I said here, is too risky. But here is the truth. That's a psyop to keep you poor and stuck in traditional finance. Meanwhile, everything behind the scenes is moving on chain, and the smartest people in the room know it, which I'm going to show you guys here in just a second via a panel discussion that took place a few weeks ago. The real risk is sitting on the sidelines while the greatest financial shift in history happens right in front of your eyes. Common sense says it all. The world is moving toward a digital economy and digital money, blockchain rails, tokenized assets, 24/7 borderless payments. It's only a matter of time before everyone is using crypto. And when that happens, the early adopters will already be sitting on the other side of the wealth gap. Don't take that from me. Again, take that from industry-leading experts with many more credentials that have recently talked on stage in panel discussions, telling you guys this straight to your face.
So again, the overlooked truth in all of this is that, and this is something that we believe at Inversion deeply, is every business will use crypto in the same way that 20 years ago, we were making this distinction of there's an internet business and then there's a non-internet business. Well, the reality is that every business today uses the internet to stay competitive. And that's the same arc that we're going to have in this industry. I'll say it again, every business will use crypto in one way, shape, or form to remain competitive, and that will happen over the next 5-10 years.
People were explaining to me what Bitcoin was. I had my eyes were like glazed over. I didn't understand it. The Winklevoss brothers came to one of my conferences, explained it to me again. Again, I didn't understand it. I wish I was smarter. I would have been a lot richer. But when you get it, when you finally get it, and the switch goes on, I'll say to you something that my friend Michael Saylor says. When he finally understood Bitcoin, he started out as a skeptic. He was like, okay, how do I stay up all night and figure out how I'm going to buy as much of this as possible? Because this is going to be the operating system of money going forward. So this is the DOS, this is the MS-DOS, or you pick whatever the operating system is that we're going to be using in technology. So to me, what's not in the consensus is that there are so many people outside of the industry. The consensus is still not with us. And that's why this opportunity is so big. This is not, people tell me, oh, this is like 1999, 1998 for the internet. And I'm looking at them like saying, no, this is like 1993 still. I still think we're before the Netscape browser went public, which was like May or June of 1995. That's how early we are. And I think that's not in the consensus.
So does any of that sound like something you don't want to be a part of? Again, I'm not enticing you guys to go out there and invest in crypto. I'm just here to show you guys the distraction from the reality, the information that does not get likes and views because it's suppressed on the internet compared to the information that gets hundreds of thousands of views that keeps people distracted. So don't let fear keep you stuck in traditional finance. Let education prepare you for the opportunity. And we still have some documents to share with you guys today from, again, some of the world's largest industry leading leading experts and financial firms and consulting organizations. So here are some past examples. Jamie Dimon 2 years ago versus JP Morgan and other GSIBs today. GSIBs are obviously, of course, globally systemic important banks. So do not get distracted by the people who want you to stay poor. They are greedy, selfish people who do not have it out for your best interest, right? The average person's best interest. So listen to Jamie Dimon. This is a video from 2 years ago.
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have built up over many years. Know your customers, sanctions, OFAC. They can get bypass all of that. If I was the governments, I'd close it down.
If I was the governments, I'd close it down. I'm a huge skeptic on Bitcoin. It's used for nothing but money laundering and financial terrorism. Again, that was from 2 years ago. Now, fast forward to just a week ago. Look at what JP Morgan announced. From Crypto UK, it says JP Morgan Chase is exploring plans to offer loans backed by clients' cryptocurrency holdings as early as next year. This would build on the bank's existing acceptance of crypto ETFs as collateral, representing a significant step towards using native cryptocurrency assets in traditional finance. It also comes at the time when updates to the U.S. Uniform Commercial Code are making it clearer for banks to treat crypto as collateral in states like New York. And down here at the bottom, it says JP Morgan may soon accept Bitcoin, Ethereum, and other digital assets as loan collateral. Yet 2 years ago, they were skeptics. They were fighting people and saying that you should steer away from Bitcoin. You shouldn't invest in it. And that is back when Bitcoin was trading sub $50,000. Now it's trading above $100,000. Matter of fact, it's trading above $110,000. So imagine had you have listened to Jamie Dimon 2 years ago because you were a skeptic, because you didn't do the research, and because you sat on the sidelines letting these people that want you to stay poor and broke and stuck in traditional finance manipulate your brain juices, right? And manipulate your way of thinking, which is exactly why I'm trying to show you guys that these people right here, like Peter Schiff, they don't have it out for your best interest. And they're not the type of people on the internet that you should be mindful of and paying attention to. So now that I've shown you guys panel discussions of industry leading experts from some of the world's largest retirement organizations like Fidelity, or organizations that offer retirement plans for individuals like Fidelity, tell you guys directly to your faces that they themselves are paying attention to crypto, and they themselves think that this opportunity is huge and people are underestimating it. Now let's show you guys some documented proof. So here is one of the largest consulting firms on the face of this planet. I believe they're in the top 4. If I'm not mistaken, they're definitely in the top 10. This is PwC's Wealth Management Insight Report from 2025 titled Shaping Wealth's Future Through Innovation, Generational Shifts, and Digitalization, right? And if we come over here, it says, additionally, cryptocurrency is regaining prominence in investor portfolios with an overall market cap surpassing $3.6 trillion in 2025 versus $1.7 trillion in 2024, which was a new all-time high. Crypto is once again a key consideration for wealth managers. I'll repeat that again. It says crypto is a key consideration for wealth managers. Peter Schiff, right? It's like, how are they not reading these documents and spewing out garbage to the average person? Maybe, again, this is why I believe it's a psyop, because you got people like this that know, look at this, 87,000 freaking views on this post. And that was when this was posted a few days ago. Depending on when you're watching this, days later, it probably has many more views. How is a document like this not getting more attention? Here it says, in which of the following alternative asset classes do you see the greatest client future strategic allocation in the next 2 to 3 years? This is, again, a PwC report where they went out and they interviewed a whole bunch of financial institutions and large family offices and wealth managers, right? And you can see 19% digital assets right there, right? 19% in digital assets. And which of the following alternative asset classes do you see the greatest client future strategic allocation? 19% of them voted digital assets. If we come back over here, it also says, additionally, the cryptocurrency market has shown resilience with positive trends hinting at renewed interest from institutional and retail investors alike, right? So I'm just trying to show you guys documentation from this year that, again, you should be paying attention to. And if you don't know where to find this documentation, you guys can always tap in to the CYPRX Discord. There is hundreds, and I'm not even exaggerating, hundreds of fundamental video breakdowns, panel discussions, documented research that never reaches the mainstream inside our Discord that you guys can tap into, so you can lock in, you can have tunnel vision, and you can stop being distracted by the mainstream distractions that exist out there on X, on YouTube, on social media, all these places that are just meant to keep you sedated, distracted, and suppressed. Okay, come tap in with us, lock into these reports, and enlighten yourself on what's really happening behind the scenes. Here is another thing that just recently took place. So check this out. I said here in this post, the UK's financial leaders aren't guessing where the future is headed. They are building it. The Payments Association Manifesto 2025 makes it crystal clear. Shout out to the CYPRX researchers for these documents. They are constantly dropping hundreds of documents per day in our Discord that are keeping us all up to date. Why? Because they're a global research team. And sometimes this type of information is suppressed in America, where it's really hard to find these types of documents on Google here in America. Well, because we have researchers all over the world, they easily pull up these documents when they drop and when they matter most. This is what the real decision makers are sitting around the table discussing. Meanwhile, people are still out there calling these new technologies a scam. If they are laser focused on digital assets, Web3, and DeFi, so should you. This isn't just innovation, it's a full system upgrade in motion. Do not sleep through the biggest transformation in financial history. And so here is the report right here. You can see the Payments Manifesto 2025, creating conditions to support growth and innovation in payments from the Payments Association. Here is the roundtable that they're sitting at. You see Peter Schiff at this roundtable? I don't think you do. But what you do see is a bunch of regulators, a bunch of people probably from central banks, and a bunch of people with valid credentials in the financial ecosystem. These are the people right here that run the financial system, not Peter Schiff. These dudes right here, these ladies and gentlemen, okay? And look at what they're talking about. You have it all right here in the documents. You cannot make this stuff up. And so if we come over here to just one tiny key little highlight, it says on 7.5, we should embrace Web3, DeFi, and smart contract standards to corroborate use cases that can be quickly adopted and proven in real-world situations. And here they are sitting down, having a nice dinner with fruit and freaking little tiny cocktails, talking about this stuff, smiling. Do they seem like crypto is a scam? No. They're sitting here building out the financial system, and they know exactly what's happening, but these documents are never going to get broadcasted to the mainstream, the general public. Why? Because again, they want you distracted. They do not want you to participate in this financial wealth transformation. They know how much money is about to come on chain, and it would behoove you guys to lock in and understand those numbers as well. So hopefully I've rested my case today as to why you should be ignoring this type of content and instead paying attention to the content that I shared with you guys today. And if again, you don't know where to find that at, you guys can always head over to CYPRXtrading.com. We'd love to have you on the team. Lock in with us in our private CYPRX Discord where you can find all this information. And if not, you guys don't want to tap into the Discord, then just make sure that you're subscribed. We're constantly dropping updated video material on the YouTube. And if you don't follow me on X, make sure that you do so. There's hundreds of documents, videos, panel discussions, always sharing just documented research from financial institutions, and it's free in order to follow us on both YouTube and X. As always, many blessings to you guys. We do appreciate the love and the support. I cannot stress enough that now is the time to pay attention. Now is the time to avoid the distractions. We are living through a transformational moment in history, and you do not want to sit sideline and not participate in this ever-evolving ecosystem. Always make sure that you're assessing your risk properly. Make sure that you're doing the proper research. Smash that thumbs up button and subscribe before you head off, and I'll see you all in the next video breakdown.